Okay, well, we are getting a number, and it's a much better number than any of you anticipated. The Jan-March number has come in, GDP has come in at 3.1%. I'm still awaiting the details. I've just got the top line number, but that's looking much better than any of the polls that we had. Our range itself was not so good. Okay, our range did cover 3.4. We had 1.2 to 3.4 for a range, but this is much better than the average that we have. I'm not able to highlight much more because that's the only number we have at the moment. The website is slowly getting updated. Anyway, your first thoughts, Mr. Joshi, this looks much better than we thought.
Yeah, it looks much better than we thought, but I think you should also remember that I think the data collection was a little impaired, I think, towards the end of March. And I think that so there could be some revisions. I mean, that's what I think. Especially, I think April, we are not getting any data. I mean, it's good we got core sector data, but I really doubt if industrial production data as a whole will come, because inflation, we could only get part of it. So I think so there the revisions to this cannot be ruled out. But I would still say that I think it's too early to conclude about the impact of lockdown the lockdown will have on GDP, because I think this was too short a period, and I think this is not a peek into what will happen in the next quarter, I mean, which is going to be much worse.
Okay. All right. I'm not able to help you with more. It is just two numbers that we have, and even this is from the wire services, that the full year FY20 GDP growth therefore stands at 4.2% versus 5% that was estimated earlier. And the Q4 GDP stands at 3.1%. The GVA growth for Jan-March comes in at 3%. So now we have a few more numbers. At 4.2% GDP growth, Indranil Pan, is this the lowest since the Lehman crisis? Did we get a 3% number around the Lehman time?
No, very honestly, I don't remember.
Okay.
Lehman seems to be history at this point in time with the current crisis, no doubt. But anyways, the point that needs to be noted is that as we were entering into the COVID crisis, the trajectory for our GDP was anyways on the downward side, which necessarily means that the structural impediments that we were anyways talking about before we actually went into the January to March quarter could actually sort of create a significant amount of headroom as we try to get out of the economic depth that we are in at this point in time. So contextually, this quarter's number also therefore becomes very relevant. First of all, as even DK pointed out, this is just a 10 days of lockdown which has led to this number. And if you accumulate that over even a 2-month period, it's quite a shuddering number that we are possibly looking at for the next quarter.
Okay. Well, to be fair, the entire month of March, imports and exports were seriously affected because East Asia had already gone into a deep lockdown. And therefore, while you may argue that our own lockdown was only since the 22nd, or maybe 24th, the manufacturing sector had suffered inability to either import or export, get spares. That was very much the chatter through the month of March. So this is a little more than just the last 8 days of March. It was a little longer. And states like Karnataka and Maharashtra had already started restricting activities, probably even earlier, maybe March 18th or so. So we did lose half the month of March at least. This number is definitely looking better. Manufacturing growth has come in at minus 1.4% for the fourth quarter. And for the full GDP itself, it is 3.1%. We are still struggling with numbers, just getting them in trickles. Okay, construction sector is a minus 2.2. Now, that's a nasty jar because construction should have stopped only in the second half of March. We had all of Jan and all of Feb for construction work. Nevertheless, we are getting a minus 2.2 as far as construction work is concerned. And construction year ago ago also was not a very big number. It was 6%. Manufacturing sector has come in at minus 1.4. Mining has come positive at 5.2%. Farm sector, that is Agri. Agri is really the savior. Agri growth, farm sector growth has come in at 5.9%. So I think that makes the big difference between the estimates of economists and what has really come. I think the best estimate we got on the street was 4% agriculture growth for Q4 at almost 6%. That contributes perhaps the surprise element. Our average was 2.2, whereas the actual GDP growth has come in at 3.1%. Agri surprising very positively. Mr. Joshi, would you want to comment on that? Can agricultural sector and allied activities be a bit of a savior even for Q1? At 5.9, this is a sterling number for Q4.
I think definitely. I think Q1, they look at the Rabi harvest. I mean, it's been so strong. And I think though there has been some hit to horticulture and to livestock, etc. But I think that subsequently picked up towards the particularly the livestock, milk, etc. picked up towards April and May. So I think agriculture is a beacon of hope for 2021. And the main reason for that is that the activity is not that much impacted by the measures that are taken to contain coronavirus. So I think this is one segment that we can look forward to. But what I was a little surprised when I looked at the whole numbers, I think we were saying 4% GDP, so 4.2 is not that far, but there is a huge difference in the last quarter numbers. So maybe there are revisions to the other quarters. That's what I'm thinking. I mean, there must be some revision that has taken place in other quarters. Otherwise, it doesn't match up.
It doesn't gel. Yeah, I agree with you, because when we were expecting 2.2, we were expecting an overall GDP growth of 4%. Sorry, of 4.4%. If for 2.2% GDP growth was giving us a 4.4% GDP growth for the full year, then 3.1 should give us a much bigger number. It is surprising that the overall GDP growth for the full year is coming out at 4.2. It's much lower than what we estimate, the average we got. So, yeah, you're right that previous quarters could be revised further lower. Okay, we are getting that number. The October-December GDP growth has been revised to 4.1. The earlier number, if you remember, was 4.7. So there's a significant revision to that number. Okay, it's revised all the way. July-September number has been revised to 4.4%. The earlier number was 5.1, if you remember. So we are getting serious downward revisions to previous numbers as well. And that's why you have an FY20 GDP growth of 4.2. So just to revise the major numbers for you, the full year FY20 GDP growth has come in at 4.2%. The Jan-March GDP number has come in at 3.1. The previous quarter, October-December, is 4.1. And the previous July-September, second quarter, is 4.4. That is a good 70 basis. It was 5.1 earlier. And finally, the April-June GDP growth has also